Thanks for coming, and I'm very happy to mention this panel. And there's lots of hype around the NFT, the playing to earn, the metaverse, but on every conference, on almost every conference, there is a panel about the DeFi. That actually means a lot. And so, before we get into the discussion, I'd like to ask you to briefly tell us about your project and what's your role in it. Could we start, please?
Yeah, I'm happy to start.
Microphone. No.
So yeah, I'm co-founder of the Fathom protocol. It's a, I would say, sustainable. I heard the word sustainability quite a few times today. Sustainable liquidity protocol that we are building at Fathom Labs. I also am employed by Securrency, and Securrency is a blockchain infrastructure provider. So we're setting this lab up inside this more proven infrastructure provider with 200 employees and large institutional clients and large blockchain clients. But we're now venturing out into the wild world of DeFi. Fathom itself is an attempt to build an entire DeFi ecosystem pretty much from the ground up on a particular blockchain that so far has been very focused on global trade and finance, and so has seen very little DeFi. And so I'll be happy to talk a little bit today about how we can bootstrap DeFi liquidity on a chain that hasn't seen much yet.
Should I go next? Hi, everyone. I'm Lasha. I'm here invited as a co-founder of Rarify, but I've been doing multiple things in the space. And with my latest venture, we're heavily focusing around the digital economy and how to bring the different blockchains and interoperability among those systems. So we think around like how can you take one asset from one ecosystem, bring it to another one? What are the abilities to create the network effects, the access, and all this kind of futuristic, risky stuff.
Hi everyone, my name is Ioseb, or Joseph. I'm co-founder of Cryptx.com. It's a traditional old-school centralized exchange, actually. You can sign up, verify your account very quickly, and buy and sell top 50 cryptocurrencies instantly. But I'm a big fan of decentralized finance, though, and that's the reason why I'm taking part in this discussion.
Okay, thank you. So let's get started. And this session is dedicated to DeFi, and I personally believe that DeFi is like the best instrument to change the traditional financial system. But now it's going through very challenging time. And my first question is going to be quite easy, how we ended up here. What was a corner milestone in the past that had us to this situation? Please. Anyone?
So I can start with a couple of I will start with one basic reason. I think it's a crypto winter, because if we go back and look at the reason why DeFi got so had its hype, it was the increasing prices on different digital assets, and we saw many new digital assets coming on the market, and the volumes on decentralized exchanges let's say Uniswap skyrocketed. Also, many people turned out to be using decentralized lending platforms like Compound or Aave as the source to increase their leverage. So they were looking up their digital assets, taking out loans and buying new digital assets, so they increased the leverage. So this was the reason. So it all happens during the bull run, and I think that when we will see another bull run within 2 or 3 years, DeFi will come back. That's the basic reason, I think.
Okay, yeah.
Yeah, I'll be quick. The connotation of the question was negative, how did we end up here, as if we're in a disaster. And I don't share that sentiment. I think what we got here in 2 years' time, that's an amazing result, because the market size, capitalization, the project, the number of people, even the attendees, I don't know, 2 years ago, even during the bull run, you will not have that many people interested. So I think it's a very positive place where we are. And yeah, the answer is pretty simple for me. So people understood the stuff. They got the value, ownership over digital assets. And then DeFi was required to just exchange this value without any friction and any type of barriers. And that's where we are. And there's like removing and removing those friction on, and that will let us grow.
Yeah, I think I agree with both the positive and the negative. We certainly had, I guess, the natural, the natural hype cycle tailing off, of course. We went from a high in like last year of $200 billion to $50 billion now. So it's only 25% of where it used to be. So that's kind of bad. And I think we had a few interesting events. I call it the CeFi contagion, where we had venues like Celsius and Voyager and Three Arrows, pretty much centralized risk-taking entities giving DeFi a bad name, right? Where we saw the actual DeFi platforms actually being quite resilient in this crisis. And then, of course, we had the crisis with Luna Terra, which again has put stablecoins, which is a key building block of DeFi, in the spotlight, especially with regulators. And we see regulators, of course, wanting to now, they've been regulating centralized exchanges for a while, but looks like they're now going after DeFi protocols and stablecoins in particular. And I guess that's a risk, right? So if we are coming into a situation where regulators are pursuing DAO token holders, that's risky. So if we have regulators looking to reshape DeFi in the image of a New York Stock Exchange, which only uses intermediaries and which is completely centralized, then that's a big risk. But this is the risk to DeFi.
It's a challenge, I would say.
It's a challenge. There's also good news, of course, that happened this year. And I would say the proof of stake, the merge, the Ethereum merge, happening pretty flawlessly, I think presents a huge opportunity for DeFi and a great source of yield for DeFi.
So if you raise the regulation thing, let's go ahead with that, because it's up in the air everywhere. How do you think how it's going to be implemented in DeFi, the regulation itself? DeFi should make a first step towards the regulation to try to set up their own rules or not? Could you give us any comment on that?
Yeah, I'm a big fan of regulating the on-ramps and off-ramps. So that tends to be the centralized exchanges, but also digital asset brokers, and leave that ocean of DeFi fairly unregulated. So only where it touches the traditional financial system, regulators should focus there and leave DeFi to evolve, because it's still at a very early stage, and you don't want to come in with these regulations which are not really fit for purpose. And are often just tick box exercises, like KYC and AML exercises, where everybody would have to upload all their private details and their source of funds and all their sensitive details like proof of address every time they use a DeFi protocol, thereby creating many attack surfaces, many ways in which data can be lost, of course. And we all know we cannot trust anybody with our data. So there are technical solutions for that. And so I think it's up to the regulators to keep an open mind when it comes to, for instance, zero knowledge on-chain identity.
Okay, thanks. Any other, probably? Any comments on regulation?
So
just turn on your mic.
I totally agree with my colleague Lasha that regulators are a big challenge for the DeFi. And we will have like two scenarios. One scenario is that DeFi as we see it will stay isolated, or the scenario two where it gets more regulated. And if we want to see DeFi more, if we want to see more adoption in the DeFi, I think it's unavoidable because I think that CBDCs are going to play a major role in DeFi, and they are coming. I'm not a big fan of CBDC though, but if you want to see more and more adoption, we will see in the future like CBDCs, fiat currencies backed by so central bank digital currencies. We are going to see like tokenized real estate. We are going to see tokenized cars and all the materials and goods. So all this together, we're going to bring new technology and new ways DeFi to be adopted. But it is not going to be the same. It's going to be more regulated, something hybrid between between current DeFi and current CeFi. So I think that's the basic future for this industry.
Lasha, anything you'd like to add?
I don't know. I'll be the bad guy. I don't think they're like, okay, when we talk about the regulation, let's like think around what could be regulated or controlled, right, in the space. If we talk about the decentralized protocols, doesn't matter. Yeah, they might go out like to the token holders, but there's like millions of people. You can't like hunt everyone down, right? They're like your voters at the end of the day, right? So it's a kind of political issue as well. In terms of like the application implementations, whether it's like decentralized exchanges, like lending out, staking, farming, yielding, all these things, they already are implemented in a completely decentralized way. There is no single entity legally or no central database that controls the action and the trade that is happening over there. So the challenge when I said that's a kind of a one technical challenge and the reality that we have from the ecosystem that is growing, right? And the only surface layer where the regulations might come in, that's a kind of an entry point and like the touch point between the physical world, the money we use to buy bread and water and stuff, and everything crypto. And yeah, I'm kind of like, I'm not against. You can build out the tools to monitor and make sure that like the surface level, when we have like bridge between the real world, the real money, and the crypto world, could be KYC applied, could be like some restrictions applied there. But other than that, if you're in fully crypto, like no one can get you until they don't know physically who you are and like, I don't know.
Yeah, I totally agree with you. But if we want to see DeFi in real economy, like if you want to look up your car in some protocol and take out CBDC, then it's going to be more like hybrid version of modern DeFi and regulated entities.
I agree, but like, do we need cars to be locked through the blockchain?
Why not? Why do we have to pay extra to the like banks or centralized financial institutions when you could just supply it to the liquidity pool and take out some CBDC out of it?
I don't know. Like, I was pro that thinking actually, but I think that when the physical world and items touch these self-executed protocols, it becomes like chaos. Because if you default, there's no one from the decentralized protocol that's going to come and sell your car, right? So I like this experience going within the digital environment, with the digital assets, with like these monkeys or whatever there is. That's where the value is, and they're like the self-executed. You can like really look it up. You default, it gets sold, money's divided. That's the automation level we can have that the real world or the centralized finance does not have. And I think we should, at least for now, stay that real, not touching the physical assets.
Yeah, but it will touch. We will see it within 5 years, I guess.
We'll see. I mean, eventually.
We'll see like independent arbitrators or like liquidators who will liquidate your car.
But
who will be the part of decentralized organization.
Agree, but it's still kind of an ugly Frankenstein version, you know? When you have like physical and this pure digital world.
Yeah, I would not say that, but let's see. Maybe Manuel can...
Yeah, and again, I agree and disagree on a couple of things. So I think DeFi, yes, it's decentralized, but it's not completely decentralized, right? It's always on a spectrum. So yes, a smart contract can be immutable. It doesn't have to be immutable. Can be immutable, and there's nothing the regulators can do about that, and that's true. But we've seen that in practice. The SEC, for instance, went to the team behind Uniswap Labs, and invited them in for a discussion. And what happened after that discussion was that the interface that provides, the Uniswap provided interface into the smart contract, delisted quite a few tokens, right? So that was just like a first shot before the bow, right? So for teams, I think it's a major issue, whether or not they can travel to the US safely or not, right? Or do they risk being locked up?
The team sits in New York City. That's where office is. So of course they're like going up there, but you have like sushi swaps, like mega swaps, all the swaps, and you don't know who's behind it. You can't stop it. You can't like chase anything.
Yeah, okay. And I guess that comes to the second point then. What do we want for DeFi? Do we want it to be only relevant to the degens and to the whales, or do we want to have it to have a broader societal application, right? So in my view, and I think that's where I agree, real-world assets do have a place in DeFi, because then they can really impact normal people's life. We had that question also about the NFTs. Why would normal people trade or play these kind of play-to-earn games? So if you want DeFi to help SMEs, for instance, get financing, and I think that's a huge opportunity, or help savers get at least a little bit of yield on their bank account. Right now they're getting zero. Then you will have to deal with the rest of society. You cannot just hide, right? But if you want to stay small and if you want to stay the Napster of finance, yeah, then you can stay isolated. And then when it comes to, but I do agree with you that if you just create, digital twins of something that exists in the real world, that's an issue, right? Because, what kind of rights do I really have over this asset in the real world just because I have a token, and will the courts accept that, etc.? So I think real-world assets have a place. There are initiatives to make, for instance, loan portfolios digitally native by having the blockchain as the ultimate source of truth. These portfolios can still be, these loans can still be made to clients of banks, but they don't exist in a secondary system, and the blockchain is just an extra technological overlay. No, the blockchain is the actual registry of those assets, securities or not.
Okay, thank you. And what else do you see as emerging trends in DeFi? What else are going to come in DeFi in the future? Manuel, what do you tell us?
So I see a couple of things. So I think what we just talked about, the onboarding of real-world assets. We have $50 billion sitting in crypto tokens in DeFi right now. That's great, and hopefully we can get back to $200 billion soon. But you look at gold, that's $10 trillion in the real world. Or look at the bond market, that's $120 trillion. So moving more of these real-world assets on chain I think is huge. The other thing I think the big problem with DeFi for investors is, and why it's not interesting for most investors, is that the yield is variable. So it's completely unpredictable, right? One day it can be 200% APY, and then the next day it's 80%, and the next day is 15%. So what do you do with that? And as these incentive tokens are depleted, it goes to zero, and people jump to the next one. So there's complete lack of fixed income that we had. I think that is changing now that we have this natural source of fixed income, which is proof of stake staking. I think we had, of course, proof of stake blockchains before Ethereum, but Ethereum is just so much bigger than everybody else. So I think this, for the first time, will allow us to build this yield curve that also other chains, I think, will adapt, and where we can really start building a truly dollar-based DeFi fixed income market, which I think will then creep into the traditional finance fixed income market.
Thank you. Ioseb, do you have
I
something?
agree with Manuel. I don't have anything to add,
Lasha,
to be honest.
anything on your side?
Yeah, I don't know. I'm I'm a digimaxi, so I don't believe in like physical world needs to be like put in blockchain. I don't believe in the things that we already have needs to be like retuned for the blockchain. I believe it's a parallel universe. It's not a mix of like the world we are and it's gonna like become a one entire thing. No, it's a different world. It's a different mindset. The digital ownership, those assets, those monkeys and stuff. It's a kind. It has its own believers and the owners and the new generation growing who like prefer to have a monkey over car. So they better like take out the loan based on that than on for the from the car. That's what I believe. And in terms of the near future, definitely one thing that we can more or less say is happening, that future is multi-chain. So definitely we have all these ecosystems like the different chains, layer 2s, app chains. Now the new trend, it's going to be huge, the application-based blockchains. And like GameFi, metaverses, like crazy stuff minted in and out, that creates a really siloed value. And that's the reality. So people playing on one game, creating this value, then like people are like in metaverse participating, and we need to understand from the digital perspective, all this digital value gets locked up. So I think the biggest trend, and now the riskiest trend, are the kind of bridges and connecting those together and the ability to exchange and swap those value with each other. And yeah, like for the past year, it is the most hacked and compromised space because about like 2.5 billion have been lost through these bridges. But the fact that they get attacked gives kind of glimpse into why they're sexy on the market, right? And the idea that these bridges in the DeFi, all these like cross-chain indexes and stuff created 500 million market in less than 2 years, that's what world needs. Like first connecting the digitals with each other and then maybe bringing in their cars. I agree, but not.
They do not exclude each other, I guess.
Yeah, but
Okay, thank you. So I believe the next question I'd like to ask, we already touched a little bit, but how do you think, what is some of the biggest problem in the real world that DeFi can solve?
real world?
Yes.
Yeah, I think it's a few things. So DeFi, of course, cuts out intermediaries, right? Which cuts out cost, which is great for the end user. The accessibility is global, so anybody with an internet access can access this DeFi for whatever needs they have, which is not the case with bank accounts, as we know. A lot of the world is unbanked or underbanked, and not only in third world countries, even in the US, a lot of people are underbanked. So I think that's great. The efficiencies, the disintermediation, the yield opportunities as well, the natural yield opportunities, which which have been lacking in the traditional financial world for quite a few years. And then I think it's also for the issuers of whatever kind of token is this. It solves distribution as well, right? So we can now go straight to the end customer globally.
Yes.
I agree, of course, but like overall, I think that the biggest innovation in blockchains and DeFi world is the instant access. So idea that I can have an instant access to all the instruments and the value and other people is amazing. And like if we imagine like how big is the friction, for example, today to take out a loan, and I'm like bound to my one identity and credit scoring in a single country or a bank that I've like put in my entire earnings. And if I move to another country, I have to start off my new life. I need to build up my reputation to take out the loan from the bank. And sometimes, yeah, you don't have that much time to live for. And with DeFi, actually, you can build your own chain reputation. And that's what I see like very unique. You can have like your trace, your history of trade, your reputation, all available for the global access. And doesn't matter where you go, you can take out a loan. You can participate in a particular, I don't know, yield staking stuff. And this is like amazing from the kind of scale perspective.
And one more benefit I would like to emphasize on top of that is that DeFi avoids the third party between between two parties, right? It eliminates the friction, and that's why it's more cheap, it's more effective, it's more fast, and so that's the biggest benefit of DeFi, I think, and that's the reason why I want to see DeFi in real assets. Lasha may call it Frankenstein, but I like this kind of Frankenstein.
Okay, so if we are talking about the real world, let's talk about the TradFi. How do you think, is a convergence TradFi with DeFi is good or bad? How do we bridge this gap between the traditional finances and the decentralized one? Manuel, any thoughts on that?
Yeah, so I think it's both good and bad. So the DeFi and TradFi convergence, but I also think it's kind of inevitable. To your point, it can be bad using Frankenstein instruments that aren't really giving you any right to the underlying asset. It can be bad in that if you give regulators a finger, they can take an arm, right, and they can just kill the whole thing. But I also think it can be good, and again, for these reasons where we want it to be meaningful for more people. And it's kind of inevitable because TradFi has already caught up, right? So on a daily basis, we deal with asset managers, bankers, insurance companies that are already jumping on the DeFi bandwagon, and they see the benefits, especially in the efficiencies and in having a completely new asset class that they can make money on, as well as being an on-ramp and an off-ramp of real-world assets. So they're already there, and of course, with that come the regulators, and with that comes the risk of just killing DeFi, right? So how do you keep DeFi, because centralization and decentralization and decentralized markets I don't think really works. So I think really plugging DeFi into TradFi or the other way around works if DeFi can remain its independence, and that's what I mean where regulators should focus on the on-ramps and off-ramps. If DeFi can remain its independence, then it's good. If it becomes dependent on TradFi, I think that's the end of it, and I would be very sad.
The end of DeFi, right? That's not.
Yeah, there was a time I was afraid that it's going to be like either very ugly, like putting all those together, or the TradFi like take over and killing the DeFi. But over time, I kind of like stayed calm because I realized that the truth is that those formats that the TradFi is built and the institutionalized, they can't be sustained in the form of the fees or commissions or the workings that the decentralized finance operates on. So they can't adopt it, nor from a technology perspective, and that's another problem. They're like super slow, bureaucratic, most of the stuff like highly regulated, so it's a kind of huge friction for them to transform. But on the other hand, there's a kind of business model that's not sustainable to the life that they are built upon, these institutions. So I'm pretty sure that it's going to be harder for them than for DeFi in terms of like pushing the regulations or vice versa.
Okay, Joseph, any comments on that?
I agree with Lash. So it will stay as we see it in any case.
Okay, great. So I believe my last question is going to be to you. It's how do you feel? What's new in digital assets in 2022? Joseph? Manuel?
What's new?
Yeah.
What's new in the digital assets?
What's new in digital assets in 2022 was?
Bunch of monkeys, animals, pictures, selfies, NFT formatted. Fun. But apart from that, I think that we're at the brink of like the new technologies in the form of the digital assets. And yeah, we did see the first wave of like NFTs, which were like, okay, collectible nature. Now we're getting more into like utility aspect of it. But I think that very promising and interesting standards are popping up, such as like non-transferable soul-bound tokens, semi-transferable tokens, dynamic NFTs. These are like kind of new features and the feature set that could be used by different utilities, and it will create more diversity in terms of what type of digital assets we have. So it's like amazing kind of starting point, I guess, 2022.
And another thing that is that after the last bull run in 2020, regulators started to wake up. So they are more active. And if we point out the Georgian market, we will see that in the coming year we'll have the new AML regulation and other standards for virtual asset providers. And also we are going to see the Georgian CBDC as well. And many CBDCs are coming from different countries like European Union. We already have Chinese CBDC. So I would say that this year was the year for regulators. Unfortunately, but
God save us.
I would add that what's new is also credit. So we now see protocols like Maple Finance and what's the other one called? Goldfinch, for instance, providing under-collateralized or uncollateralized credit on chain. So that we hadn't seen that before. Before you needed to come with 100 in value to borrow 50. And now you can come with 15 and borrow 100. So that's going to be interesting and see how that develops. And I think again that's linked to the also the rise of the fixed income market. What else is new? Stable coins. We see now each DeFi protocol minting its own stable coin, which I like, and I like all these different types of stable coins that are created now and that show a lot of innovation, which I set in the juxtaposition with CBDCs, of which I'm highly skeptical because I think it's a great tool for surveillance capitalism and giving the state, a view into your private life. And if your social rating goes down, then they can just lock those CBDCs. So I'm highly skeptical and allergic of CBDCs, although I recognize that there is different ways that they can be implemented. But I rather see, one thing is for sure with CBDCs, they will not be innovative. They will come out into the market, and that's it then, right? No more innovation. So I rather see that come from the private sector, from the DeFi protocols.
Thank you very much. Lasha, would you like to add something?
No, I agree. CBDC is evil. We need to avoid that.
Yeah, that's definitely. And I believe we already ran out of time. So thank you very much for this panel. Thank you very much for participation. It was very interesting.
Thank you.
See you.